points on the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in at January 7th, 2022, and I'm gonna be buying some weekly options tomorrow. We have a catalyst. Tomorrow is the non-farm payrolls. You're also gonna be getting some consumer credit data, but as far as the non-farms, given what we got with the Fed minutes over the last few days, it has a lot of importance. The last Fed minutes, that was our biggest reaction even since 08, and everything on the table and even what we saw today, it is all pointing towards a bigger move. Now, I got a couple of theories I want to go over, or just really an outline for what I'm expecting, but the point is the volatility is still here. It kind of cooled down today, and this helped ease some concerns for anybody who owns tech. Some people are still a little bit bearish, but as far as even the bonds, some people are like, all right, they're chilled out. It has calmed down. So we have a lot on the table. How we close tomorrow, even that data, it is going to be important, and there's probably going to be a lot of plays for the first Friday. So we got a lot to talk about. I want to go over everything that happened in the market today, what's happening tomorrow, the plays that we made, and we made a bunch today, and I have a lot that I'm excited. I do have 1 week. I got like 2 or 3 weeklies that I like, okay? But again, none of this is a recommendation. Option trade, only risking, lose on financial investment, lose on financial advice, no purpose, only thing for one day. But seriously though, we're going to have some fun. You still have earnings along the way, so there will be opportunities for some short term, but just do not forget earnings is in about 2 weeks. Netflix, Google, Amazon, all of that. So just save them dollars. You'll be surprised. But also too, we're getting a lot of volatility. So right off the bat, you guys know what you need to do. Drop your thumbs up on that video. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. You could come there in the morning and watch the plays, and that's where we do them all. So as far as what you got today, you really saw the value stock sell off. Again, the Dow has been up, and after today, it finally went red on the year. The S&P and NASDAQ are both red right now for 2022, but lately, it was all about the bonds and tech, and that's where you saw a lot of the damage. But today, that chilled out. The S&P and NASDAQ only moved about 0.1%, but it was the Dow Jones. That is what gave us a little bit of pain. Essentially, a lot of the things that were holding up over the last days, it did flip. We were talking about this yesterday, and sure enough, that's what you saw today. Those safe havens that people rush to, like utilities, even healthcare and materials, they got clapped, and now part of it was part of earnings and guidance. We did get to hear from Walgreens. That was good. Conagra, they didn't do so hot. Even today, T-Mobile after hours, they were good, but then Humana, they dropped their guidance, and that killed all of the healthcare stocks. So point was, we actually saw some other things sell off. Again, energy was able to save us, so that was good, but overall, you watched a little bit different of a move than we've been seeing. It calmed some things down. The bond volatility chilled, and we even got to hear from Fed Bullard. He is usually more hawkish. He didn't really say anything that would move the market. Pretty much while he was talking, it was all during this, and there wasn't anything to take us out of this zone. So he sounded very hawkish. He even brought up stuff around March, which kind of even surprised me, and now it kind of makes sense why the market's pricing what it is. But overall, we are still going to see how we finish this week, and that's why now that jobs report will be very, very key. Whatever number comes out, it will say a lot, and just given the responses that we got and now how pivotal this Fed meeting is, that is really going to be the key to watch. And then pretty much wherever we close and how tomorrow ends, it's going to give us some insight to, okay, where are the bonds? Where are stocks? Are we still seeing this correlation between bonds and stocks? Is it positive or is it negative? And that will give us some insight leading into earnings in the Fed. So coming into your first pretty picture here, what this chart is showing you, it is the amount of bond volatility that we've seen. And pretty much this is the highest since 2020, at least for the upside. And the only other time you saw that was 2019, believe it or not. Yes, we had the TLT in 2020, but if you remember the 2019 TLT, that actually had way more volatility. So point is, after this week, you have watched bonds move more than ever, and that's why following up from here, we want to see what happens, or if this in fact does lead to a pivot point. Pretty much any one of these spikes you could pretty much say was a very big pivot point, all the way from 2019. That was the first rate cut. Then you had the volatility during COVID, and then you had the emergency emergency cuts. Again, you saw everything up and down between February and March. Then June, July, when we saw more volatility and they did more stimulus, you saw that here. And then pretty much the only other time you saw this much bond volatility was beginning of last year with GameStop. So point is, the bonds are still going to be key. And I think this is just highlighting everything, and even what I'm looking for with the market. Yes, I think we're moving around a lot, but I'm still waiting for the earnings. And then I just need to see what happens after the Fed. That is when I think the real volatility is going to come. Again, all of this movement, all of these signals, even what is being signaled by the Fed so far, we're going to find out a lot, but chances are this meeting and then even February or March, they're probably going to be some of the most important ones coming into this economic cycle. So whatever we're seeing now, it may be a lead up, but just don't underestimate the real big moves or final moves are probably going to occur around these catalyst dates, especially with the Fed and especially with everything that's on the line for rate cuts, tapering, what it means for the future, pulling back the stimulus, and everything else in between. So I just think this is a warm-up. You'll see when we get into the plays, there is still other things, and that's why I think earnings will offer a buffer, but pretty much end of this month leading into February, that's where I expect the real action to happen. I think this is this is still just a warm-up. So I hope you guys are in the game. It is very straightforward. We don't have any company news and events. We did a lot of plays, and that's what I want to focus on because earnings is right around the corner and we're getting volatility. So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I got 3 different stacks that I'm looking at coming into tomorrow, but we did make a lot of plays. And if you were watching yesterday, we made some yesterday, but I'm also taking the profits very quickly. So there is one weekly I'm excited about, but I want to go over the other trades that I made. And you could see here, and what I could say again is just take profits. Again, there's some plays that are going to whiff or they might be down now, like the Teslas and Microsofts. Again, if you're thinking about earnings, you got to make sure you get time on them. But in the meantime, some plays are going to go down, but the ones that are working in your favor, if a lot of things are moving around, just don't be afraid to take some of the profits, and some stuff may come back to life. So as far as the trades that I made today, I grabbed 5 Walgreens in the morning. This was the first one. So before I took profits or anything, I did put money out. And remember, we sold out of the Walgreens yesterday because of earnings. They had their earnings today. We got the results in the morning, and then that's where I made the play. I did keep it small just because they were up 3%. The market has been a little bit volatile, and really what happened off the morning, they instantly sold off. You'll see here pre-market, they were up a lot. By the time we were open, the stock was even down like 3%. So I said, okay, I'm going to go for the earnings continuation. It was already up. We know the earnings and everything was good. It just kind of sold off. So I decided to grab these 55s for 40 cents. And then like 20 minutes later, I was able to flip them out. You've seen this. This is now the post earnings from the pre-earnings. Got about 50%. This one was smaller, but just dipping our toes for now, especially in this marketplace, but got out of that one. And then now these Ubers, if you remember, I bought these ones at close, and these ones were a risky play. I did go a little bit bigger, but we got this one with like 30 minutes left in the market. This is still the short-term contracts. Again, if you're watching any of these plays, it's one thing to get a weekly, but it's also these January 21st. I mean, there's a little bit amount of time left, so keep that in mind. But this play was risky. I bought 20 of these for 42 cents, so about like $800. And then here in the morning, again, within like 9 minutes, Uber had a run up. These went up about 40 or 50%. Closed out of them, got like $300 or $400 or something like that. So a pretty decent trade, but then closed out of that one. And really, it was just 9 minutes, holding it 30 minutes before close yesterday, and then getting out of it. Then the Altrias, we had these at the beginning of the week. I thought they were bigger. Again, January, shorter term. These were holding up about 50% still. So I sold all 50 of them for 6 cents, got the 50%. And then now these Rivians, if you guys remember, I think we bought it a while ago. I don't even know, but this was December 17th. So I remember I kept it small. I said I'll do like $200. It was a small Rivian play. I think it was after their earnings there. That was like the post. And then it kind of got clapped there. We were up barely on it, but today after the sell-off, there was enough time. This thing went up. I just put a fat limit order on there and I got filled. We were able to close out with a 10-cent profit, only $30, but this play was down like 90% a while ago. And again, this is what I'm saying to the whole just take profits, get some time on things. Again, you've also watched some of the average leverage down strategies, but hopefully you're seeing how we move. And then now to the next play. This was the Netflix, and now this is one I'm going to be watching. We'll skip over here to the plays here, but as far as the play, I grabbed the February 610 for $900, and this is a pre-earnings play. So I'll get to the chart, but you'll see here on the list, I got Amazon and Netflix, and I did make another play on Amazon, pretty much the same logic, but these are the earnings run-up. Netflix is going to be here in 2 weeks, then Amazon, Microsoft, the rest of them, it's going to be the week after that, and then all of the other following companies, and then also the Fed too. But Netflix is usually the first here in the cycle. Obviously, we're seeing some other ones, but the point is now, even though it's early, the preems are at a very, very low level. Again, all of these contracts have just been clapped with this volatility and that move after yesterday. Even off of this morning, it was a little bit shaky. But the one thing with all of these plays, and we brought it up, both Netflix, Amazon, even Microsoft and Facebook, is that they're pretty much all right at the levels where they had their last earnings. So even if we come to Netflix, you'll notice the same thing. So that right there, it usually happens like that. It's not uncommon to see. Again, go over the last 1 year. Netflix, ironically enough, it's at the place that it popped from its last earnings. It was a little bit lower, but that was to the high of their last earnings, which was where they jumped up from the beginning of the year at the last earnings. So kind of a key level here just for the equity. That's why I said, all right, well, hopefully in the next 2 weeks, especially since we've had such a big sell-off, if we get premium in our favor, we might be able to snag a good pre-earnings run-up, but it is early, and if it does drop, there is no safe haven. Again, you have seen us get clapped on it. The point is, I'm just willing to take the risk, so stay in the game, baby. But coming to the option chain, you'll see what I mean here. This is just the pricing of the contract that I got, the 610, and you can see here, 610, it was actually just in the money not too long ago. Believe it or not, that same contract started the year here at $3,000. So point was, even at today when I got it at like $900, you can see it met all of the criteria I'm looking for. I don't know, I'm not even seeing that $9 fill on the chart. Even then, I got it at $9, right? Yeah, $9 flat. So we got it at the lowest point of the day, but then also when you just pull it out on the daily and everything, this thing has just plummeted getting ready into earnings. So it might drop from here. I'm not saying that it won't, but the point is now we probably have more odds on our favor with that, and we got the catalyst with earnings and all of that. So I decided to go with that. That was the first play, but then I also did the same thing on Amazon. So I did it on the Robinhood. I wanted to give that account some love, but Robinhood is not loading right now for some reason. But I grabbed the February 4,000 call, and I grabbed one of these at like $675. So pretty much the low of the day. We didn't get to snag it as cheap as we did with the Netflix, but again, you pull these contracts out, and these started the year at like 1,000 all the way up to 1,300. Remember, I had that play on Amazon. I said I'll keep earnings in mind and all that. I saw it go up. I flipped out of it, and now all of those same plays are cheaper. So as you can see, we could get the double dip. We got to take some profits, and now if we do get any sort of turnaround after pretty much a majority of this year with stocks going down, it's probably going to be able to hook us up. So keep that one in mind. But now coming back to the rest of the plays, after that Netflix, I sold out of the XOM. Remember, we got these yesterday. Pretty much they were up now about 100%. We bought these at like 6-7 cents yesterday. Bought 100 contracts. I sold out of them. I think these will come back, but like I said, you're getting the waves there with oil, and oil could be good, but it's not as if I'm fully out. Remember, when we made all those oil plays, I also went big on USO with some time. So these things are pretty much coming back, and my logic is walking away with all of the other plays with profit. We'll wait to double dip on one of the downturns there, but even if there is more upside with oil, and usually now the companies are outpacing the actual spot price. So if oil does go crazy, I'm assuming I'll be able to come back on there, get to take profits, and then the rest now, these are the final two plays that we have for tomorrow. So jumping back to the keys here, MasterCard, that is the play that I love for the weekly. I have those old plays that came back, and they're pretty much right at the cusp from going break even or not. But why I really like MasterCard, this thing meets the criteria with the margins. It's kind of moving like the banks. They just had ex-dividend today, so the fact that they kind of dropped a little, I mean, I think that affected it somewhat, but overall, this thing has been a silent behemoth. It's came back up to the levels. It's had some volatilities, but I really like how they opened up the year, so I'm going to be looking at this one. If the sentiment tomorrow is good, I think they're going to be doing good, but now there's also a little mini catalyst. You're going to be getting the consumer credit, and it's the consumer credit for the holiday season, so that number comes in strong. long, you may see a positive uptick. And remember, all of that retail sales stuff leading into Christmas and afterwards, people really liked it. So we'll see what happens. But as far as the play, I decided to go with the next week. I didn't grab this week expired tomorrow. I said I'll get a little bit of time. I spent a decent amount. They're somewhat close to the money. I think right now it's about $10 out the money for now. But I grabbed 3 of them for $1.40. Spent about like $400 or $500 there. We'll see what happens. And I'm still holding those other January 21st, the week after, and I think it's the same strike price. So I really do like it. We'll see what we do from there. But that was the second or the first play. I'm gonna look at that one a lot tomorrow. We'll see. But there was that, and then finally Facebook. This was the leader of the day today, and it made it the cheapest puts. Again, I was talking about it. I don't really have protection as much as I would like with some of the downturns. Again, I've been writing stuff through, taking profits on the winners, and I'm trying to think a little bit ahead. So there is some risk with that. So I'm thinking, all right, if I could get some good puts, that's what I want. But the problem after what you saw yesterday, that was a huge sell-off. It skyrocketed all of the premium. So today, Facebook was the leader in the market, especially for tech stocks. They went up about like 3-4%. They were absolutely killing it. So fortunately enough, these were the only put plays that I could get. Thankfully, it covers tech, but these were the only ones that were really cheaper than the day before. If you wanted to play even TBT, TLT, the UVXY, any even like McDonald's, I mean, you could go look at a really wide range of companies. All of the puts were up because of that little risk-off mini event that you had at the end of the day. Again, that little last hour sell-off was absolutely huge when you add it to there, and it really jacked up a lot of the put protection. So I was looking for a cheap play, and the only thing that I got there was Facebook. So pretty much this is my negative downside play. This would be a perfect timing for the pre-earnings. Again, look at the Netflix and Amazon. It's the same logic. Facebook's at the same level. It was outpacing today, so pretty much my logic is here. Anything, I got 2 out of the 3, or even we got even Microsoft as well. I could hit 3 out of 4. If the leader, this one had the cheapest puts, it's been outperforming. If it comes down, it could give us some protection at the very least, better than overpaying for some premium. So I decided to go with the January 21st 300 puts for 89 cents. These don't cover earnings. It's only going to give me short-term protection here in the next couple of days, and I'm fine with that because essentially if these gap up or anything, I'm going to flip these out like any of the other ones. January 21st, I'm not going to hesitate to let them go quick, especially if we got a gain. Again, this is just like a highly glorified weekly. There's just an extra 2 weeks, so keep that one in mind. But come into the premium of the chart, you'll see what I'm talking about here at like 89 cents. It was pretty much where it opened at the day before, and it's like it shot up to this price, but if you look at the equilibrium, it could be lower, so there was still some risk. And even on the day, if we got it at a better point, we could have got it for almost about 50% more, but pretty much or 30% less. That's pretty much the risk to reward. I'm expecting if it's a dud in the next few days, it'll drop 30 to 40% here. But if it does end up coming down and Facebook, tech, all of it outpaces, you have way more upside. If you even go look at like a SPY put, this is what I'm talking about. I'll just go to one that costs the same exact price. You'll see it is just super elevated compared to yesterday. It's not at yesterday's opening price. Pretty much Facebook would be at this level. So in this case, these are going actually for 90 cents. It says 80, but the last trade there at 98 cents at $1, you could be right back down to the low 40s. You lose 60%, but then even if it ticks up here, you're only going to make 20 or 30% if it touches the lows again. And again, that's assuming that the theta doesn't clap you. So that's what I'm keeping in mind with it. I thought it would be a decent play, at least the best of what we got here, but we'll see how we could shuffle in and out of different ones throughout this week and then even setting up in the next week. But those were all the plays. Hopefully you're getting to learn something watching it, and hopefully you're seeing just there's still a lot of things moving, and most of all, even with some of this stuff I've been taking profits on, I mean, these are all calls for the most part. This was an old put that came back to life, but even in the midst of most of these moves, I think this whole year so far, we've taken the profits, but it has all just been playing some of these winners that have been moving while the market has been going down. So just keep those opportunities in mind. But as far as everything else, going to be watching Rivian. They got absolutely wrecked today. We'll see how that plays out. The Altria, if they come back, I mean, I'm down a double dip. We even did this a couple times last week, so keep that one in mind. Pretty much all of these plays I'd still be watching, even WBA with the post earnings. XOM, I'm waiting for the double dip again. Like I said, just expect some of these waves here. So it was already on a rampage. I figure we take profit. Is it killing it more after hours? Yeah, that's great. So those plays are probably still going up, but watch them. The Netflix, Disney, this one was a big leader, but the premiums are expensive. However, if there is certain flushes, I mean, just have your name on some of the stocks you like, especially for earnings, because if you do get a big risk-off flush, I mean, it's hooking us up on some of the premiums, but it's a little bit scary there, so watch out for that. Then GME, they shot up 30% after hours on news of their NFT platform, so watch out for that. DWAC, they killed it here. I guess Reuters reported that the platform or Trump's platform's coming out in February. I guess no plans have changed. So getting exciting for everybody who's investing in there. We'll see. Netflix, like we said, and then Amazon and Apple. These are also meet the earnings criteria. We don't have any plays on them just yet. Again, or I do have the Amazon ones, but the Apple, this one has been the safe haven I want to see. But if there is even more downside, I may even be considering some puts if it does start to break some of these levels. So we'll see what happens. But as far as TLT and everything else, it's very, very simple. We may get a move like this where we kind of bounce up and like chill out and retest, but there is more volatility in the market. If that jobs report is bad and this thing keeps flushing, we will have a lot more pressure. But essentially, whenever there's going to be the bounce, pretty much whenever the NASDAQ really has a bounce, again, this is just how you started the year. It's not pretty. You'll probably watch it coincide with TLT, and then we'll finally get the second test, or maybe it may take an extra week, may even stall a little bit. But the point is, all of it just coincides with earnings and then the Fed. So hopefully you got the timeline in place. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure to post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to control the pride, baby. But Nicole loves you. I love you. I'm gonna see you in the morning. Let's go.